What's going on, traders? Just got to the desk here. It's the afternoon and I thought I would pull up and do a little live stream. So I hope you guys are doing good today. Just getting my thing fired up and ready to do some not trading because we don't trade the afternoons. I'm gonna pop out the chat here real quick and I'm gonna bring this over way up here. And I know I should have done this before the live stream. I always get into the I'm always into that, you know. So now what we're gonna do is this. 1 second. We're gonna go to live chat screen. We're gonna change the URL for this to this. There we go. That's pretty sweet. Let's put that up there and we're rocking and rolling. There's a little line there, but that's not the end of the world. I can fix that. How about this? There we go. That'll get rid of the line. Alright, next time I stream I gotta do that first. Alright, what's popping over here now, hey? So we're looking at the screen now. Okay, that's pretty reasonable. Yeah, that's pretty reasonable. Take a look at what the markets are up to here. They seem to be pretty quiet. Hey Regulo, what's going on, sir? Let's see if this works. Yes, that works. Cool. Cheers, dude. I like that picture of the bike. Bike riding's awesome. Hey, sir, what's going on? Okay, so let's take a look at what the markets are up to here. We're basically still at all-time highs here. The NASDAQ and the S&P, we've been in a trading range pretty much for the most part of today. I believe the NASDAQ hit an all-time high today. I'm just gonna confirm that. Actually, I'll bring you guys over to the chart screen, even though this is not what I normally look at when I'm trading, but this is just for market context purposes. So today the NASDAQ hit an all-time high again, yet again. So the current area in play would be about these 964s and a half, more or less. And this was in play this morning. Now I would say this is more the area that's in play here. This was in play in the morning, something I was highlighting this morning, as well as this resistance right here at this, well, you could say 880-ish, because it was a previous day sort of area. But this is our current trading range for today here, so that's what we're playing in. And let me just go over to the S&P futures, and this is a 5-minute chart. I think I should go back to 15. And also this chart's taking a bit of time to load, so I'm gonna have to work on that. Maybe there's some aspect of the chart book I can improve. Hey yo, NASDAQ boy, what's up, sir? Hope you're well, mister. So yeah, we're on the chart screen now. That's cool, perfect. So this morning for the S&Ps, it was all about this area. It was about the 15.5 to about 18, and as we held above that, really the longs kept control. I traded this morning, and I had a good session overall. I finished around 11 o'clock when the volatility stopped. So, you know, that's basically my plan. You know, I trade when the volatility is good. When it's no good, I just stop. You know, there's no opportunity in that case. And that's it. So I would say these 18s are still in play here on the S&Ps, and we're kind of in a tight consolidated range, as you can see right here. And that's basically where we're at, you know. In terms of the NASDAQ, you can say we're bearish right now from these 952s and a half. Chance to test the lower end of this trading range into the close, but yep, that's where we're at basically. So below 22.25 on the S&P and below 52.5 on the NASDAQ. Right now, we've seen supply come into the market. That's a 15-minute context right there. Actually, never mind. This is a 5-minute chart. I don't know why I had that on a 5-minute chart. There we go. That's better. Okay, sorry. Let's correct that. These levels are 5-minute levels. Let's fix that to a 15-minute level. 948.25. That's the level I needed for the NASDAQ. All right, let's see. My back has popped out thanks to the NQ gods. What do you mean, man? You mean that your health is struggling? That's no good. That means you're staying in front of the screen too long. You need to go to the gym, dude. You need to exercise. Exercising is very important, bro. That's why a lot of traders, man, they trade only the first hour and a half maximum. Then you get the fuck out of here, man. Don't even stay around watching this shit. When the volatility's not there, go out, smoke a cigar, and get out of here. Hey, broke boy, what's good? What do you mean you're jealous of my back health? I never show you my back. Anyways, what's happening, guys? Ask questions and stuff. Or else, what's the point of this live stream? I don't know. Okay, so I'm going to make sure I'm on demo account mode because I don't feel like trading live markets this afternoon. We'll see. And let's see here. In the meantime, I'll just take a look at opening up another chart book here. Let's see. I was working on a chart book for the small exchange. Here it is. A bunch of DOMs basically. And I had that continuous contract for the 2-year yield also that I was working on. A few things. But basically here what you're looking at, guys, is these are all symbols that trade on small exchange. You can see here small US crude oil, 2-year yield, 10-year yield, 30-year yield, and their small crypto product which they just released. And you can see here the liquidity is a little bit messy on this crypto product, but I think they're working on improving it. But you can see that liquidity is pretty good on these yield products here. So I've been keeping an eye on the yields, and I was gonna probably do a video on that pretty soon here because of the excessive amount of movement in the yield market, basically in the bond market, but more specifically in the yield products that we've got going on here. So yeah, if you wanted some quotes there, wait a second, I'll give you a quote. Where the hell is the chart? There we go. Correlation. Let's bring over the quote board. And you can see here bonds are flat. Here's the product, the crypto products. Bitcoin's up about, sorry, this crypto product's up about 2%. Bitcoin is up almost 5%. And I'm gonna do a video in the future explaining this crypto product they came out with on the small exchange. And basically it's an equity index product. So this is not just Bitcoin, it's companies that hold Bitcoin. So anyways, I'm going to talk about that in the video I put out. So yeah, cryptos and whatnot. I think we may as well just work on this watch list now that we're here. So let's put in some symbols. So I'll insert a row here and let's start typing in some CQG symbols. So let's go for f.us.10 Y, sorry, let's start with the 30YX21. Well, it should give me a quote because that's the right symbol. I don't know why I'm not getting a quote there. So let's type in another one. f.us.10YX21. And again, I'm not getting a quote. So that's a little bit odd. Anyhow, I'll bring you guys over to the other screen, and what I'm going to show you is this instead. Whoops. 1 second. Don't want to disclose too many positions. Let's see here. Okay, here we go. Here we have some quotes. Here we have continuous contract quotes. Okay, look at this 2-year yield with a 7.5% move today just on the session. That's a big movement for this product, and this product only has a margin of a couple $100, so pretty interesting. And if you're looking to get exposure to the yield products, that's probably one way you're gonna do it. Okay, and at the same time I'm helping my friends over at the small exchange show off their products, so check out that. If you're using interactive brokers, it's 2YSME, that's the product. And here's the continuous contract. November expiry is currently the front month there. And that is it, friends. So let's go over to this and let's check out what you guys are writing in the comment section here. I like cigars, I'm just a lazy frack. Who is this guy Fat Cat? He's profitable. Do you use statistics to find an edge in the market? Fat Cat's a trader. He's a cool guy, you know. I talk with him sometimes. He trades primarily the S&P futures. And yeah, man, I don't know what to tell you. Do you use statistics? I don't know what you mean by statistics, but I kind of use short-term statistics. Like basically almost every indicator you use that's like a derivative of price in a way is a statistic. Like for example, a moving average, right? It's giving you the average of price over the time period you selected. So statistically, for example, let's say you're in an uptrend, you've been seeing that statistically or on average you've been respecting the moving average, right? And then one time when the market closes above or below that moving average, now you can say that okay, the pattern has been breached. That's not really a statistic. Another statistic would be like taking like a linear regression over a certain amount of prices and saying okay, on average the market is moving this much, and then you can say okay, on average I'll keep my orders this far away. But again, it's not super reliable to take too many long-term statistics and apply them to a short-term market. Again, it's a lot of work, it's a lot of complicated stuff, and I'm not a statistician or whatever the hell you call it. I'm not a statistics expert, is what I'm trying to say. Have you done any rigorous backtesting on the book? No, I have not. Do you scalp futures mainly? Yes. Looking to move potentially to some equity products. When Sierra Chart comes out with their NASDAQ data feed, I'm going to start by looking at a lot more equities. No, but like taking a data set and backtesting with certain variables to have a statistical edge. Well, I kind of understand what you mean. Again, it depends on the variables that you're using. There are certain, things or certain principles, I believe, that stand true, that have edge directly built into them. And if you know what some of these principles are, then that in itself is a statistical edge. You just have to know what it is technically. And sometimes it's very simple stuff, like using the bid offer spread is a statistic that if on average, if you trade on the spread, if you keep the edge of the spread in your favor, that's an edge right there. That's statistically proven that you have an edge. Can you say what is the core idea behind your order book theory? I would say I do not use the order. I do not believe, this is my opinion only, I do not believe that the order book is very, 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 very important for scalping. I believe it's a little bit important because you are seeing the order book is telling you the intent to trade. It's showing you the intent of traders. They're placing orders, right? You have traders, you have big traders, you have small traders, and they're all placing their orders on the book, right? So you might have your big market maker. When the market is quiet, these big guys, what they do often, what they can do is when they get filled on their order, they start pushing the market in one way or another. They start pulling their offers away, they start pulling their bids away, etc. And they can do whatever they want because they have the ability to trade a lot of size. So there's certain scenarios where you have to pay attention to the pulling and stacking of the orders on the order book. So in that case, it's very relevant to look at, especially in a thinner market, right? The NASDAQ, for example, when it's moving in very thin and it's potentially slow, I would argue don't even trade it when it's slow, but you have to pay attention to how the spread is being manipulated, how the bid and offers are being manipulated, right? So again, what I mentioned before is like, when enough orders get filled, you start to see orders on the other side of the book pulling away. And that indicates to you that certain market participants might be trying to push the market one way or another. In terms of big orders on the book, I don't think it's very relevant if you're trying to trade a short term, because look, dude, as a fucking retail trader, you're not trying to compete against big traders. You're trying to take money away from small traders more than anything, and you're trying to ride the wave, of the market. If I don't focus too much on big orders on the book. I don't find it's very relevant. I like to concentrate more on like on average, where you can see certain, like where you can tell they're arbitrage orders. Like if you look at the book on the NASDAQ, you can see sometimes where there's like, we're like single digits in the middle of the price, and then over further away we're like double digits. Those double digit orders are basically arbitrage orders, or some of them are arbitrage orders. And when they trade, you have to look at when the market goes there, are they going to trade or are they going to pull away? So certain little nuances. Again, there's arguably some of them are basically meaningless, like I trying to tell you. At the end of the day, there's more important things to be watching for. So yeah. That's all I can tell you. We're only 13 people in the stream, so that's not it's not a big deal here. Hope you guys are doing well. So the market's pretty slow here today. I think it's probably going to chop into the close. The market's supposed to be expecting some big news tomorrow. The Fed is going to announce something in regards to their tapering. So that's what the market's kind of awaiting, I imagine. And, traders are going to place their bets. All types of market participants might be doing business in the markets tomorrow after that, or during or after that announcement at 2 p.m. Eastern, I believe, 2:30. I think the chair is going to speak, Fed Chair Powell. So keep an eye out for that. There's going to probably be some volatility. But, at the end of the day, don't get too caught up on it either. I find a lot of traders, a lot of people on YouTube are going to like talk to you about things as if they're like super important. But at the end of the day, nobody knows anything. The guy's going to say, watch out, we're probably going to see some volatility. Then you show up and there's no volatility. So, don't program yourself too strongly to think anything. That's kind of what I learned about trading. And don't forget that, about luck. Luck is also a big aspect when it comes to short-term trading. So, yeah. Yeah, I think we just had a few people join the stream. What's up, guys? Hope you guys are doing well. And don't forget to smash the like button if, because it helps with the channel, and that's what it's all about. What's poppin'? What's poppin' over here, huh? Thought I would do an afternoon stream because I don't do them enough, and I find it's hard with my current schedule to start, doing all these live streams and everything, to have a balanced lifestyle between trading, between making videos, between keeping my health in order, and all that stuff. We just had Halloween. This was like maximum parties. I definitely took some time to relax there, but now we're back. So, it's hard to balance all that stuff. And now we're back, so here we go. So this guy, Dream Sick, what's up, dude? Is that a ticker symbol? HIHI. I think it is because you put the dollar sign in front of it. So let me open TradingView over here. And like I was saying earlier, when Sierra Chart comes out with their NASDAQ data feed, I'm going to start using that to look at some equities. And then we could start, you guys can start throwing me ticker symbols. And then we'll start pumping them, Just kidding. Pumpers, baby. Don't become a pumper. Oh, man. What the hell's happening here now? Why did this change? All it takes for one person, I share my TradingView account with a couple of friends. All it takes is for one of them to change the color theme to something else, and then it screws up my entire thing. Doesn't matter. Let's take a look at what's going on here. This guy says HIHI. Is that a real ticker? Holiday Island Holdings. It's an OTC stock. Dude, why are you doing business in OTC stocks, huh? Don't tell me you're trying to pump and dump this thing, huh? Are you a full-time trader? Well, yeah, I guess I would say I am. Sorry, let me keep that on the screen. Although, this is kind of a good question. I'm going to get back to you in a second here. So, this guy, Dreamsicle, he said, put up this ticker HIHI. Now, what I can see from this stock that you put up on my screen here is that it's very thinly traded. There's very no volume here. And, we're trading around 7 cents to 8 cents range here. And there's not really much to be gotten from this short-term action here because really there's like a lack of trading taking place, So, for example, today's volume, if I highlight my cursor over this ticker, I can see that according to this chart, it's telling me that we've only traded 320 shares today. So that's not something you want to be trading. Get it off the screen is what I'm trying to tell you. All right. Let's go to the other screen, huh? Okay, so this guy Peter is asking me, hey Peter, what's going on? You're saying, are you a full-time trader? Yes. So I would say I am a full-time trader because I look at the markets like daily and I trade them daily most of the time. However, trading is not my full-time income for a number of reasons. Well, I mean, it's, you know, it's a variable income business, and it is a stream of income if you're consistent, right? If you're consistent in your trading, right? It can be a stream of income, but like other, you know, businesses you can run, it's not a consistent form of income, right? It's variable income. So if maybe behind that question you're asking me, hey, is it possible to be a full-time trader? I would say yes, but be careful because there's a long learning curve to it. So yeah, I'll be honest with you. I make the most of my income right now from my YouTube channel. I'm being 100% honest with you. So yeah, and thank you guys for that, by the way. I appreciate it a lot. And smash like on the stream if you just got here. Please appreciate it. Is there one thing you can call the most important? NASDAQ trader, I would say it's your own psychology towards the marketplace. That is going to be one of the most important things. Your own awareness of the marketplace, and then your own awareness of how you're reacting to what's happening in the marketplace, you know? Remember that you're a human. And you're exposed to human tendencies and emotions, right? I discussed this a bit in that last video I did about trading a demo account. Every time you take a trade and you leave money on the table maybe, or if you got into the trade and you got stopped right away, or if you got into the trade and then the fucking thing came one tick away from your profit taker and then you got screwed over or something, every time that happens, you get frustrated. You have to admit the fact that you're getting frustrated. The greed and the fear, you know? When you have a bad trade, or 2 bad trades, or 3 bad trades, then on that 4th trade, you're more inclined to cut it earlier because you're fearful of what's happening, right? There's little things, you know, little things like that. You gotta just be aware of your own psychology. You gotta be aware of also, you got to be aware also of why are you trading. A good friend of mine, I like the way he thinks about trading. I'll be honest with you. And he basically said this. He wants to trade, you know, small amount of money, small risk, capital, risk capital, with the purpose of working on himself. You know, working on his tendencies. And I think this is a great way to think of it, you know? You're trading because trading forces you to work on yourself. It forces you to keep an awareness, a strong degree of awareness in regards to the things you're going to experience from interacting in the marketplace. Those emotions that you're going to feel, you know? The greed and the fear and the euphoria, the frustration, all that stuff. So if you think about trading as a process of personal development, you know, it's pretty good. I like that way of thinking, you know. And then you can also say, you know, why do you trade? Okay, because it offers you a certain degree of freedom, right? Because you can trade from anywhere. But again, that gets into that gray zone about the fact that, you know, trading's a variable income business, and it just increases the probability that you're going to think of it subjectively and you're going to think of it in terms of P&L too much. And I don't believe it's about that, but yeah. When are you going to buy YOLO call options? There's a time and place for everything, my friend. I certainly won't be buying any YOLO call options on the NASDAQ. I mean, technically, you know, the probability is in your favor, right? Look at this daily chart. We're one time framing up. Every day is closing higher than the next. However, we're going into pretty much a risk event tomorrow. So, I mean, if you're buying YOLO call options here, maybe the probabilities maybe slightly are not in your favor as much as they were, you know, if you were buying them, you know, here maybe, or here. I don't know. That's always hindsight. I don't like hindsight. Car Avis stock. Oh yeah, that thing, car. That was a stock that someone was talking about today. Avis. Oh goodness me. This looks like, yeah, earnings. There you go. Earnings related. Okay, let's look at a 30-minute chart. Pump, sell. $358. And then it's just consolidated. Let's look at a 15-minute. See if it gets it and forget anything out of this. So you got this right here. You got this. Why is it not working? Why is the snap to grid? Ah, there we go. I gotta turn it on. I'm so used to Sierra chart. I'm holding the shift key all the time. $450. You got some resistance up there. And now, based on this chart here, well, you could say, you know, $336. Below this, probably see some more consolidation. Above this, we're still kind of what I would call one-time framing up. This is just chopping here. There's nothing to trade here now. What are we? 15 minutes till close. Nothing to trade here, guys. But tomorrow off the open, there might be some trading there. I don't trade stocks yet. You think reading level 2 is important as a trader? Well, yes. So look, it all depends on like the info that you need to get, right? So as I was discussing with the trader before, he was asking me questions about this. Look, can you say what is the core idea about your order book theory? Order book. The order book is what you just asked me, level 2. That's what the order book is. The order book is level 2. It's basically this. It's showing you, you know, at every single price point, how many traders, how many orders are there to buy, and how many orders are there to sell. Limit orders, that is. You're only seeing limit orders. So it is important because you're seeing the intent to trade. You know, some guys placing an order there. You have traders, many traders in a row are placing orders that are, you know, are pushing the price potentially. Maybe they're pushing the price in one direction or another. You know, maybe I'm a trader. I have all of these offers here. All of them are mine, and I'm speaking from the perspective of like the bigger market makers, right? So like you don't know, you know, some of these orders here are probably like the same, you know, institution or whatever, and if they want to, they can pull some of their orders out at whatever moment. So when you're starting to see the market move in one direction without a lot of trading taking place, you're seeing things like that, orders being added and pulled to the book. So in this case, reading level 2 is important, but I will say that a lot of traders don't know what to look for, and it's just gonna require some information. You know, the default way of thinking is like saying, okay, I see a big bid or a big offer, so I'm gonna like try to get in front of that. But that doesn't work, because with today's technology today, you're a big trader. You're not going to show your size on the book. Sometimes you will show your size if you're trying to advertise and maybe do a transaction like a hedge order or something. But look, man, if you're a big trader and you're there, and your intent is to like push around the market a little bit, you're not going to show your hand in one trade. You know, when you see a big block like that appear on the book, what that is normally is not a short-term speculating trader. And again, you can't know what it is. That's again what I'm trying to get across here, is you can't know what those orders are. You can't know. So that's why I believe it's not important. So there's certain things that are important about that, certain things that aren't, and that's it. And I don't know shit. I'm just a guy on YouTube. Remember that, please. Remember that. Thanks for answering the question. Honestly, I was just curious. I saw your account back over a year ago when I started my journey. Cheers, dude. Appreciate that. Earnings squeeze. For me to be a full-time trader is too stressful. Sometimes you need your time for yourself to be out of the markets. Absolutely, my friend. You need to take breaks because you're a human. And humans, you know, you're a human. That's it. Just be a human. You can't try to be something you're not. You know, you can't try to be a robot. You're a human at the end of the day. Someone blew up car stock. Yes, I'm not straight face. I'm just watching. I'm reading your comments here. Are you a metal guitarist? Let's play some. Yeah, dude. To be honest, when I first started playing, I was 10 years old, and I was jamming with my boy Kevy, and we would jam all kinds of, you know, Lamb of God, Metallica, Megadeth, a bit Iron Maiden, but more like kind of heavier stuff. And then I started to get into even heavier stuff like technical death metal and stuff. But behind all of that, I have a classical background, and then I studied in jazz guitar. So you could say I'm pretty much a melting pot when it comes to music. But yeah, I can play metal. I love playing. You know what? One of my favorite guitarists is Marty Friedman, the guitarist of Megadeth in the 90s. Magical. So I see icebergs reload sometimes. It's very obvious. Yes. So you know, when you start seeing those icebergs, it normally means, you know, some big traders are getting filled on their orders. When I start to see too much big traders, I just get the hell. I don't do business with big traders. You know, you don't want to fuck around when there's like. Anyways, that's another whatever. To each their own about trading. Globex, is there a way to trade order flow and count the amount of lots traded to determine the direction of line of resistance? I don't really understand your question, but there are many ways to aggregate market data and to display market data on your screen, right? So for example, what you're seeing here, right, is a couple of markets. You're seeing the S&P futures, you're seeing the NASDAQ futures, you're seeing a custom symbol I made. And what you're seeing in these columns, and I'm just gonna make sure that you're able to see my cursor here. Actually, let me turn on the magnifying glass. There we go. Now you should see my cursor. And let me just make sure that okay, can you guys see my cursor? I know I probably didn't have it active before, but yeah, okay. Okay, look at my cursor here. Here's the price, here's the bid, here's the offers. Alrighty, here's the last traded cumulative quantity at each price right here, that little print right there, as well as here on the S&P futures. That's basically the last traded quantity, okay, every time it trades. And it's also cumulative, right? So if we see many trades occur at a price, it's going to show that number until it changes the price, okay? And on next to this right here, next to this, I've placed a volume by price, and what all this is showing me is the total amount of volume that is traded here. And I have this profile to reset every 30 seconds automatically, because I don't really care about what happens, you know, a minute ago. I don't really need to care for my style of trading. And again, it depends, right? If I do need to reference what's been happening more than that time frame ago, I can go over here and I can look at this chart, right? I can see, okay, you know, we're here, you know, and where the market has been trading, technically, I can see it right here on this chart, right? But when it comes to reading that real time, and again, it depends on multiple factors. Depends on what the volatility is like. Depends on how the market is trading. That's going to depend on what method I'm going to use to employ to trade it, okay? So this, you know, this little 30-second volume here, all I'm using this for basically is in the short term is to see, for example, if there's like a potentially an iceberg at a price that's trapping many traders in one area. But again, the info that I gain from that is only relevant in the short term. It's not relevant, you know, it won't be relevant in the next minute or two. And again, it depends on how fast the market's moving. So he's asking me a question about how to count the amount of last traded. Yeah, so this is an indicator here that's being used to count trades, right? It's calculating every trade in the last 30 seconds. And what's really interesting here is that this is a custom symbol on the right side of my screen. And if you guys can go watch that video I just posted on how to create a custom symbol in Sierra chart. But I basically explained how I created this symbol right here. And what this symbol is, it's this. It's Apple plus Microsoft plus Amazon plus Tesla plus Google plus Nvidia plus Facebook, Adobe, and all these stocks put together. Okay, it's adding together their value and displaying that as a custom instrument, and it's also tracking volume, which I found really blew me away. That's like really totally insane, obviously. So I can track volume on this ticker as well, even though it's a custom calculated symbol. So basically, what this ticker is, it's more than 50% of the holdings of the entire NASDAQ. It's basically these stocks right here. So I use it as a correlation. And that's it. So you can see, guys, the market's very choppy here. It's closing in a tightening range, and this is probably what we've this is what we should be expecting here, because tomorrow is big news coming out, and the market's a lot of potential movement tomorrow. So keep an eye out for that, or maybe nothing will happen. Again, I'm not going to try and pump you guys up for anything, because I don't know what's going to happen. Nobody knows what's going to happen. Was literally hovering over. How old are you? I'm 27. Was literally hovering over the level 2 order book subscription yesterday on IBKR. Yeah. I would be cautious when the news is hyping it. Yeah, dude. Cheers, dude. Yes, Mr. NASDAQ, I have been trading more close to the open because this is when there's the most volatility. I believe that this is the most opportune time to trade, you know, because look, you got multiple types of market participants, you know, all doing business during that time frame, right? So that's going to cause more movement. You got your speculators, you got your hedgers, you got your whatever. You got all kinds of people doing business in the marketplace. So that's going to, you know, reduce the probability that you're trading against a fucking big boy and he's going to just move the market against you as soon as you get filled. And that's probably what's going to happen to you if you're starting to trade in the slow markets. And, you know, I guess that's a tip, right? If you're trading and the market's slow, and if you notice that every time you get filled, as soon as you see you got filled, now the market's moving against you. You just got to admit it to yourself, like you're not reading it, you're not seeing it, or there's just not enough movement, and you shouldn't be fucking trading it to begin with. So it's about knowing your environment. And it's also about luck. You need luck on your side too. I was saying that to my friend, you know, to my buddy who was telling me that he trades, you know, he's trading to work on himself, which I believe that this is such a good way of thinking of it, you know, because he knows he has gambling tendencies, right? He knows that he doesn't like losing. He knows that he gets mad, you know, he gets frustrated easily. So he's using that knowledge about his own tendencies, and he's saying, okay, I'm going to trade with the idea that I'm gonna work on these tendencies. When I start to feel the fear, the greed, the frustration come onto me, or when I start to see that, you know, I'm not reading it right, or I'm just kind of forcing trades, I'm gonna acknowledge that and I'm gonna stop, you know. So different ways to think. Again, it's a lot. That's why, you know, I'm starting to know why a lot of traders talk a lot about trading psychology, because really it's a lot about how you think about the market. Check SBEA. Okay, let's check it. Let's check SBEA. This car is still not moving here. Looks like they blew their engine out. SBEA. Oh, they got a whole bunch of them, huh? They got the W's, they got the U's, and they got the normal. Let's check out the normal one. Hey, it looks kind of similar to that car stock we were just looking at. Well, this thing's consolidating. Here we're going to get some sell stops here, it looks like, down to this $11. I would scalp it short right now. Look at this. And you just go and you just ride it until they take out the sell stops. $11. It has room. It has a bit of room. But again, I don't know anything. 15-minute chart. It looks the same as that car stock, to be honest. Now, for whatever reason, if it were to get back above $11.35, after seeing this liquidity run over here that we're seeing currently, this $11 area, probably you can, tomorrow, I guess, go and get some buy stops. But it looks pretty bearish. I mean, look at this. Massive pump, massive drop. Dip buy, dip buy, dip buy, and then it's going lower. So it's going to get some sell stops currently. That's what it looks like, at least in the short term. Still up 13% on the session because it was pumped up since after hours. If I zoom out on the daily chart, let's see what we got. Oh yeah, it's an, oh my god, oh my gosh, oh man, you know what this reminds me of? I feel sorry, man. Honestly, if you're long on this shit, I feel sorry for you. But you know what this reminds me of is one of the first times when I first got, and I just realized I was on the wrong screen the whole time. Shit, oh my god, that always happens to me. That always happens to me. Basically, I was looking at this. Okay, what this reminds me of is when I was probably in my first year of trading, okay? I did exactly this. I saw a stock that was up fucking 200%. And because I was just, you know, young and dumb, I just said, all right, if it's up 200, it's going to go up 300. And I just saw how much it was moving, right? It was moving a lot. It was fluctuating a lot. So I said, all right, if it's fluctuating this much, there's a good chance that if I buy some, I'm going to be in the money pretty soon. And, you know, I bought some, maybe a few hundred shares. I was in a margin account. I was pretty much leveraged, right? And I was trading with too much money at that time. And for me, it was too much because, you know, I was still relatively new to trading. Honestly, I believe that if you're trading, you know, thousands of dollars and you haven't even been trading for a year, you're in for some trouble, right? So I got into this fucking stock. This thing was up 200%. And I might have had a profit very briefly on it, but I ended up becoming a bag holder on it. And I think the loss on that trade was like almost the entire capital I put up on the trade. Was probably around $2,000 US or more. And for me, that was like, you know, for a fucking 24-year-old, I guess you could say 23-year-old guy, that's a lot of fucking money. You know, I don't come from a rich family. But, so yeah, you know, I feel sorry for you if you're long this stock. Yeah, that's it. Oh my gosh. Would you know if TD Ameritrade volume profiles are accurate? I do not know. Sorry, sir. NASDAQ trader, you're so funny, man. He's writing so much stuff. Market is about to close. Why did you start now? Because this is the only time that I can do a live stream, man. I can only live stream at this time, you know. In the morning, I'm trading. In the afternoon, at 12 o'clock, I eat breakfast, and then I do business, you know, emails, answer emails, you know, and then normally like 1, 2, 3 o'clock, I'm working on filming videos. So like, when the hell do I have time to do a live stream? You know what I'm saying? So it's now or never, basically. And that's it. Reading Seneca, probably better help for him than trading. I don't know what you mean by that, but yeah. Yeah, the car, okay. Hedge fund who was shorting died it, yeah. Upticking like nuts. ES, young and dumb, needs luck. You need luck, dude. Dude, it doesn't matter how good you are as a trader. That's what I was saying earlier. That's what I realized. That's what my friend told me. My friend, you know, he hasn't been trading for a long time, but this guy, man, he's worked at a casino. And he knows that, well, he basically helped me realize that, you know, if luck is not on your side, it doesn't matter how good your skills are. Your skills will matter in the long run, okay? If you're consistent with your skills, you have to know your skills and how they give you an edge in the long run. That's absolutely true. So there is merit to looking at long-term statistics, right? Over the course of the month, the last few months, etc., to make fine adjustments. All of that, very important. However, in the short term, you need luck on your side a little bit, more than a little bit. I was lucky today. I had one trade that came 2 ticks away from my stop, and then I ended up, you know, in a profit on the trade. And for me as a scalper, that's considered luck. So I got lucky today. I think I had 7 trades, only 1 loser, and I attribute my success to luck. So yeah, 2,000 shares. I thought it was boss. Bill Ackman was boss, and he folded. You guys are fucking funny. 2K USD about the price of 1 university unit in finance education. Yeah, 2K USD. It costs the price of one of these fucking trading courses now. Buy my course, guys. I'm gonna teach you how to fucking lose all your money in the NASDAQ. It costs $2,000. Just kidding. And press the I'm just reading your comments. It's really funny. Guys, like the stream, please. It helps with the algorithm. Okay. I'm still reading your comments. And I pressed the wrong button and sold it all into a loss. I wanted to sell a little bit, but if you hold a loser all day under stress and it's over your head, you're gonna press the wrong buttons. All right, just check where TD Ameritrade comes from. Probably GFIS. GFIS, that's the data provider for IB. It's pretty good, but it's aggregated. So if you need the super good tick data, you're not going to get it. You're not going to get it there. And casino work most likely forces than probabilistic mindset. Baffling how general public just cannot. Yes. Sure. Oh, that long on the open, dude. Juicy. Yeah. Luck is when you YOLO calls on car at 500. Well, no. Okay, let's relax here. Let's relax, my guy. So, what I meant by luck is that you need it on your side. But if your entire trading strategy relies on luck, then you have problems, and then you're not going to make money as a trader. You need skills, but you need luck too. Don't lose 2K on your first trade. Pay for my course instead, or you can lose money together. Yeah, that's your selling point right there. That's your selling point. Oh, good. Here we go. Here we go. We're starting to fire some shots now. Here we're starting to fire the shots. Oh my God, Mr. Captain. It could be better than Canadian futures trader on 30. You're starting to fire the shots. Okay, so you know, if you guys watch my videos, you guys know that, you know, I'm not a super much a fan of these combines and stuff. Not to say that they're useless, but you're not going to experience the same, you know, emotions. I'm just going to mute my mic for a sec while I blow my nose, unless you want to hear my trumpet. I muted the trumpet. There you go. So guys, shoot me a bunch of questions. It's 4 o'clock. The market just closed. Let's take a look what's happening over here. We closed basically in the tightening range. That was to be expected for today's trading. To be expected that we close in a tightening range. All right, let's clean up these charts here. This is the NASDAQ futures. I believe I had a 5-minute chart up, but that's pretty reasonable right there. These 903s, that was in play this morning. And there was some good volatility. I would say, you know, this and this, there was good volatility this morning. I mean, it wasn't super crazy, but it was good enough that if you were picky, there was good trades to be had, you know. There's our beautiful daily chart. It's fantastically beautiful. Now, there was something I wanted to do with my ES chart that I was realizing was taking long to load the data. Here's a quick tip here. Days to load on Sierra chart. How many days you load on your chart is going to impact potentially performance. So this chart is only loading 25 days of data. Another thing that's going to impact your performance is if you're using volume by price studies. So take a look at your volume by price studies right here. Look at this session profile. And what I can see here is that I am loading 7 days of profiles. I can lower that even more because I don't really care that much about session profiles too much anyways. I do in a way because they give you some bigger context. And they tend to get run through, like VPOC from previous session. I've seen it a number of times, VPOC from previous session, it gets flushed right through. They get the stops, or sometimes it'll flush and then it'll rotate, or sometimes it'll just bounce right off of them. But yeah, not really what I focus on as a scalper. So these 903s, that was relevant this morning, and as you can see, that was pretty much our short-term support. And this area is still relevant over here. So is this. Actually, I can get rid of this one. I just don't think that's as relevant anymore at this case, in this situation here. But this is basically the range that we're in on the NASDAQ. There's not much other context to be had other than this. And I go on tangents a lot. What I was talking about is the volume by price indicator. So like, look, to change this chart to a 30-minute chart, it takes about 4 seconds. Now to change this chart to a 30-minute chart, it takes longer. There's a reason for that. it's because I think I'm loading more data, or there's something more complicated in this that is affecting that. And I think it's due to this indicator right here, this zigzag delta. I'll remove moving average, and I believe it's actually the session profiles that I have this activated. Difference of bid and ask, volume, I'm going to get rid of that. And now I think it should load faster. Let's see. Still the same thing. Anyways, we're debunking mysteries. Okay, your context of luck is taking into your personal edge on the market, which I'm assuming puts you close to 50-50. Most traders are so terrible they aren't near 50-50, so luck is not a big factor, skill is. I agree. I agree. I agree that skill, you know, at the end of the day, in the long run, the skill is gonna make the big difference, right? You're just, and again, your skill relating to what you're trying to do in your strategy. If you trade, like I trade in a way that, like, I'm very discretionary, you know, like I wait for the setups to set up and I can see, okay, this is a decent sort of trade setting up here, and I use a variety of indicators. That's why I like to keep a 1 minute chart here, just to keep, you know, to see what our average traders are seeing. Believe it or not, you know, after a while of trading, after a while of like studying order flow, reviewing markets, and like I went through a phase of just looking at only the DOM at one point, I believe that there's still a huge benefit just to looking at a 1 minute chart, because it gives me a, you know, a short-term context of, like, you know, where the weak hands are, where the strong hands came in, you know, are we respecting this moving average? Some of it is subjective, but some of it is important, right? So, you know, don't totally go away from certain things. And again, I just do what works for me. So the skill is in knowing what you're after, knowing where your edge is, knowing, you know, statistically where you perform well in, and knowing where you have, you know, like mental clarity in the marketplace as well. And this comes in time. And then the luck, you need it on your side too. So don't forget about it. And maybe I'm just talking shit, I don't know. What are you trading? I'm trading NASDAQ futures. But I'll trade whatever is good to trade. What's your favorite juicy meats? I don't know. Steak. Thanks for the $2, man. I appreciate that. I'm gonna go buy a coffee. Did you grab NQ before the run up? No. Okay. You said something in this statement here. Again, thanks for the $2 there. We're gonna go into a pretty deep topic here, guys. Wait. I'm gonna try and simplify it, but look. The way the industry comes across to new traders is in a gambling way. Meaning that people look at the movements of the market and they're saying, they're making current trading decisions based on these big movements that they're seeing, right? So what this does is it gets traders to hold on to trades longer, right? So you got, everyone's trying to go for the big fucking moves. You're trying to get 100 points in the NASDAQ. You're trying to get fucking $5,000 in your Bitcoin trade or whatever. I believe, my opinion only, is that the most money to be made in short-term trading is in the average price movement of the marketplace, the average ebb and flow, just getting in and out of the ebb and flow of the marketplace in, you know, high probability spots, you know, in spots that you determine on average will give you an edge. Remember, you do need luck on your side too, but you need skills, but you need luck. I believe that the most money to be made is in the average movements of the marketplace, not in the giant movements that every trader and their fucking grandma's trying to go for. You're seeing these big movements. You're seeing, look, you look at Bitcoin, right? It's at 60,000. I was at a party the other day. The guy's telling me, hey, man, you think I'm stupid if I bought Bitcoin 2 days ago? And part of me is like, I mean, yeah, you are, yeah, because what you're doing is you're chasing a trade that already happened. Bitcoin's already at 65,000 or whatever. I mean, I don't know what you're looking for in terms of a profit target, but I would bet my money that this guy's not looking for just a small movement of, you know, 5% in Bitcoin, which is for 5%, Bitcoin's an average movement, right? This guy's looking for another 60,000. He thinks it's going to go to 100,000. You know what I mean? So this is kind of where traders have it wrong. And that comes with experience. Reasons to trade micros versus... Sorry, reasons to trade micro, Emini, S&P futures. There's good liquidity, there's good volume, a lot of people trade it, there's a lot of market participants, diversity in the traders. It's very actively traded, you can get in and out of trades fast, your stops get respected. Do you need any more info than that? It's one of the best products to trade. If we get expanded wedge trade, thanks to Jay Powell, I'm gonna put his portrait on my wall when I go short tomorrow. Good one, Captain. Looking for 4. All right, man. Give it up for Captain. He's got a lot of good comedy. Did you go to college? You're very smart with these platforms. I did go to college. However, I did not study anything related to trading. I studied music. Normally, what's your slip in cents when you long at ask in IBKR? You mean commission, sir? To be honest, I never buy at the ask anyways, so I wouldn't know. But what I could tell you is, if you're trading stocks or options, you're gonna more likely pay a slightly higher commission, because there's something with those products that if you buy at the ask, you're considered a liquidity taker, in which case you're gonna pay a little higher commission. And the opposite is also true if you sit there on the limit order and wait to get filled. It also depends on the product you're trading. If you're trading a product that is not doing a lot of volume, then you're very unlikely to be paying a lower commission if you're acting as a liquidity provider, especially if the liquidity you're providing is a very small amount of shares. For example, if you're trading on a product like a not a heavily traded, for example, a real estate trust, and you look at the book and the market maker is quoting 100 shares by 100 shares in a few cents bid and offer. If you submit a bid of 35 shares, you know, in order for you to get filled, you're going to need another liquidity provider to give you a piece of his trade, in which case your order is very insignificant. Whereas if you submit a bid of 1,000 shares or a few bids of 100 shares a piece, in those cases you might be more likely to get a rebate on those trades, because you're providing a significant amount of liquidity on that order book. And I haven't tried it, so please don't take what I said as a fact, because I don't know if you're going to get a rebate. I'm just explaining to you a practical scenario. Very good, sir. Very good. I like that way of thinking. But consistency in terms of what? And again, this is it brings us back to like the certain things that we're talking about. You know, consistency in terms of your ability to take good bets, I think, and consistency in your ability to stay away from medium or bad bets, and also consistency in your ability to recognize when you are feeling something, a natural human, you know, emotion of frustration, which is essentially fueling you to make worse decisions, like hold on to trades and not lock in open profits, you know, add to a losing trade, all the things that we know that we shouldn't be doing. Consistency in your ability to not do those things, to catch yourself in the moment before you start doing these things that you know you're not supposed to do, but you're still doing them. Why? That's the question. Like today, it was good speed on NQ to gamble in while it was dipping into longs and sell into the range on the way up. Yeah, dude, I mean, like, there was some good trades today. I mean, I told you I had all good trades today. Today was a good day. We'll see if we can do the same tomorrow, you know. I don't know. Hopefully luck's on my side like it was today. In hindsight, chart looked easy, but in the moment it was uninteresting when to exit. Yeah, possible. I'm practicing larger sizes and smaller takes. It's all you, Captain. Captain's the only one writing here. Oh, man. Ah, man. You know, everyone has their own approach to trading. I feel like I have something that I'm comfortable with right now. I'm pretty comfortable with it. So I'm going to stick with that. You know, one thing that I did that I find is really, you know, helpful is I remove my limit profit takers. I don't keep limit profit takers anymore. I'll exit when the market tells me to exit. What I did add is a trailing stop. More specifically, a trailing stop that trails by a step movement. And that step movement is relative to the amount of volatility in the marketplace. And I'll also do it manually as well, because at the end of the day, I'm a manual trader, right? I'll trail it manually. And the whole idea behind this is I'm trying to take what the market gives me. And also the whole idea behind it is that I don't know how much the market's going to give me. Nobody does. I've seen the NASDAQ run 50 points without stopping and more. So why would I cut off the possibility of that happening by always having a limit profit taker? And again, it depends, right? There's a discretionary skill involved with this as well, you know? Sometimes you need to exit, right? For example, you're trading a certain range and you know that there's a good chance it's going to get caught up around the even number. In that case, you place your limit order right before the even number, right? And again, it depends on how much size you're trading. If you're trading, you know, multiple lots, then I would argue that keeping limit profit takers is a smarter thing to do for a certain amount of your position. But yeah, dude, why would you keep a limit profit taker so close away when you don't know how much it's gonna fucking run in your favor? Let it ride, man. Especially with these types of markets. I mean, when these markets run, they run. Let it ride. Just let it ride and take what it gives you. Take what it fucking gives you, man. If it gives you 4, you take it. If it gives you 1, you take it. If it gives you nothing, you get out. If it's going against you as soon as you got in, you get out. Don't even stay in that shit. It depends though, right? Discretion. I look to get precise entries. If I'm not nailing entries, it's no good. No good. Let's see what you guys are saying here. Again, like I was saying, a lot of traders are always trying to go for these fucking home run trades, man. You don't know how much the market's going to give you, right? Some setups have better risk to reward and whatnot. I believe in that. But there are a lot of situations, I think more often than not, there's a high degree of ambiguity in how much the market is actually offering you. You don't know how much it's going to go. You might have a fucking 30-point target, and then the thing goes 5 in your favor, comes back against you, goes for your stop, and then it runs 30 points. Now, why are you going to let it hit your stop when you could just fucking take the scratch or whatever, trail it? If it's starting to give you 5, you take 3, doesn't matter. And then it comes back against you, all right, you trade, and then you see that the market stopped out some weaker hands, and now guess what? It's time to get long again and go for it again. And now this time, well, maybe it gave you 7, or maybe it gave you nothing, right? Right? You take what it gives you. I like this way of thinking. Keeps me out of trouble. Keeps me from being, a greedy bastard and saying, oh, I want 10, I want 20 points. Oh, this setup's going to give me 30 points. Or this setup only gives me 6 points. You don't fucking know how much it's going to give you, man. You can get a big old guy come in and start selling it right on top of you. And that's where the luck comes in, right? You get into a good trade, it's in your favor. And then 1 second later, boom. Jerome Powell comes in and dumps a fuckload on your ass, and then you get stopped out. You got unlucky. What are you going to say, huh? We trade different methods. Hey, dude, thanks for the $10, dude. Appreciate that. Appreciate it. Now I can go buy 5 more coffees. Thanks. We trade different methods. I don't YOLO feuds. I use MACD. I had crossed into buy 1 hour and 30 before the run up and confirmed over 0 MACD in the 5 and 15 minute. So it was blackjack, but it was an edge on the house. There you go, my man. If you know your indicator well enough and you know the edge it provides you, then that's what it's all about, Statistically, you know your edge and whatnot, right? And it just so happened that time, it worked. So great, man. Quebec. Let's go. Limit profit takers are definitely a bad idea, in my opinion. Running up a stop loss to secure profits manually is fine. But as you said, you never know what the market wants to give you. That is true, sir. Listening to larger orders sometimes helps with momentum scalps. You know, I'm a little mixed on this because one thing's for sure, when I start to see big traders do business right on the spread, kind of tells me to stay away. Like we saw that a few times today, where you start to see, you know, on average, right? For example, let's say on average the book on the ES is about 100 contracts, and then you start to see last traded quantity 500, something like that. You know, that tells you there's big traders doing business, hedgers or whatever, and you know that's not tradable for a short-term retail trader. You know, so I stay away when I see that. Let them do their business, let the market get back to its normal business, and then you do your business. But whatever, if you have a method that revolves around looking at these large orders, then by all means. I just don't trade using those large orders. What music are you into? A lot. I'm listening to a lot of, oh man, I like so much music. I mean, look, it depends what you want to listen to, right? So I have, you know, there's two categories for me. There's high information music, and then there's low information music. High information music is more like Johann Sebastian Bach, you know, these Latin salsa bands, potentially, you know, like some progressive Egyptian music. This guy Omar Khorshid, amazing Egyptian guitar player. He played with a lot of greats. And low information music would be more like that kind of ambient, relaxed music that you kind of put on when you just want to wake up in the morning or just relax at night and get ready for bed type of thing. I'm a fan of a lot of music, you know, like I like heavy metal. I like, you know, trap from time to time. I like, you know, jazz fusion mixed with like rock type of thing. I have a lot of inspirations musically, you know, so that's kind of hard to answer that question. Do you care about levels from the last session or VWAP? You can use them as an objective decision for using trailing stops rather than limit orders for securing a couple of ticks. No, I don't, to be honest. Like, look, man, when the for me, I trade in a time frame that when the market's going in my favor, I just fucking let it ride, man. Just fucking take for what it's giving you. You know, I'm not gonna, you know, there might be some trades where I'll sit through a chop, but, man, like, I don't want to sit through a chop. I just want to take what it gives me, you know. Because, like, there's a good chance that on the next rotation, I'll be able to catch something else, you know. I don't need to, you know, and again, it depends on what it's offering, you know. It depends on what's happening, you know. It depends on how obvious. Do we have any weak hands? Where are the weak hands? Where are the strong hands? Where are they coming in? You know, are we seeing big players now? Like the little things, like you got to keep an eye on that you get used to watching. But to answer what I was saying, you know, I just take what it gives me, man. Like if it's going in my favor, I'll just fucking take it, dude. Like let it ride and just take it, and don't stay in trades I don't stay in trades that are, well, first of all, my stop is already very tight, but I don't stay in trades that are going against me. Like if I see I got into a trade and I didn't get any edge on the spread at all, I kind of know that I might have been reading it wrong, or I might have gotten filled by a big trader. In that case, I would prefer to scratch the trade, you know. There's little nuances, without going into like 1,000 details. Did I miss the guitar part? No, I didn't play anything. Johannes, yeah, there you go. Have you already told us your trading story? How long ago did you start? 2018, second quarter. So that would make it what? More than 3 years now? But I guess like this, you know, the journey I've went on was quite a long one, you know, because I didn't really stop for any time at all. And I don't know how many days I've traded since I started, but a lot. A lot. So, you know, it depends on your dedication, right? If you're putting in that dedication, you're gonna get there faster than someone who's like only trading once or twice a week, you know. But also, you don't want to force it either. You don't want to rush it. It's not, trading is not something you want to rush. It's not something to be rushed. So if your stop loss was 200, would you break it at 100? It depends. It depends. I don't like thinking in terms of dollars, but let's say I'll give you an example in points. Let's say my let's say I buy it at 60 or 960. My stop's at 55. I had reasons for buying it at 60. And if I see that the reasons that I had for buying it at 60 are indicating to me that 60 wasn't the right place to be buying it, then I get out, you know. And I guess that was a bad example because I would never trade right at the current price of where the market is. If I do, I better be right immediately. So I have two strategies, a passive one and an aggressive one. If I'm trading a more aggressive strategy, meaning I'm placing, my orders are being placed, you know, anywhere from 2 points, 3 points to 1 point away from the current traded price, last traded price. For these types of trades, if I'm not in a profit immediately or very soon after, I look to scratch the trade, meaning get out as soon as I can. And also, if I enter the trade and I got filled by what I categorize as a big trader, meaning as soon as I enter the trade and I'm offside right away and I saw that a block just came in and flushed the market down 2 points, that indicates to me that I got filled by a big trader and I look to get out right away. And another thing is that if I got into a price and I'm giving you everything, hey guys. If I got into a price and I see that my correlations are now ticking the opposite way, indicating to me that value might be changing, then I also look to get out of that trade right away. So yeah, I would say when I enter, if I immediately hit red on a non-vol market, I know I had a bad entry but with a good stop loss, and a trade with good confirmations, I'd rather risk hitting stop loss than exiting early. Yeah, man, look, it depends on the time frame of your trade. If you're going for bigger plays, right, it depends on, you know, the area you're working within, right? Like I know a lot of traders that they give themselves an area to work in, right? So they say, okay, I think from these 40s to these 30s to these 25s or whatever, this is sort of the range I'm looking to scale in. So, you know, I'm going to layer in some bids in that area. And then, you know, the trader will adapt accordingly. I know a trader who trades exactly that way, and they do quite well because they're, you know, they give themselves, you know, multiple spots because they're what do you call it? They're you know, you're scaling in over a price range rather than only one price. You're not trying to catch like the current move. You're just going for like a bigger trade, like you're describing to me. The way you're describing it, Bryce, is you're going for sort of a bigger idea, maybe like a 15-minute time frame. And in those cases, yeah, you will probably have to sit through a chop or two because it's going to come back, you know, test your entry a couple of times, get out the weak hands before it moves in your direction and give you the bigger play. So I know exactly what you mean. Jiffo, very true, man. Don't rush it. Great Dane, yes sir. Speaking of the muscles, I'm about to head over to the gym and pump some iron myself. They all need help. Give them all the tips. 90% are still gonna blow up. Yeah, dude. Exactly. You said it, bro. You said it. This is why you're the captain. This is why you're the captain, dude. Because It doesn't matter if you know all the fucking tips in the world. You could have skills on top of skills, on top of more skills. But if you're not being conscious of those human emotions that are coming at you when you're trading, man, the frustration buildup, the greed that you're up on the day and now you're confident. Guess what? Now you're chasing the market. And then you got a fucking bad price. And then it hit your stop. Did you know why you were wrong? Did you know why you chased it? Maybe you did. But I guarantee you that if you were not able to acknowledge the fact that there was an emotion in play there, that might have contributed to the fact that you chased that thing, then you're going to keep doing it again and again. You're going to do it again and again and again and again until you're back at break even. And then you're going to start giving away more. And I believe that this is why trading, one reason why trading is very hard. And another reason is because, well, I also believe it's why a lot of people focus on trading psychology. Because it's very important. It's very important to be in control of your psychology when you're trading. It is nerving to sit for 3 hours in a trade sometimes, but if the confirmations were good, typically it pays off. Yeah, man. I do have a question for you. So look, let's say you're going for a big play, Bryce. And, everything's going well. At what point do you, how do you manage your exit on this trade? Are you discretionary about your exit in the sense that if the market's giving you a signal that it's indicating to you that, there's some profit taking against your trade, and now it seems like a good moment to take some off the table, do you go with that? That would be more like a discretionary approach of managing your trade and saying, I'm seeing, some accumulation now here. I'm seeing, some profit taking, some two-way business, profit taking, whatever you want to call it. Is that going to indicate to you to get out of your trade, or at least trim some off? Or do you always have a very specific, target for every trade? Yeah. Talking about YouTube content. I'm amazed at how Forex so popular on CFD brokers while trading futures has yeah. Forex got popular with scammers and pyramid schemes, so retails got hooked on the quick money and high margins, yeah. Limit profit taker means stop loss, yeah. No, limit profit taker is let's say I bought it here. I want to sell some here. And I get paid on the trade, a limit order. I'm not sure if Bryce was still there. I'm not sure if he even heard what I asked. If he doesn't answer soon, I'll just stop the stream. But it's cool. Hey, cheers, great Dana. Appreciate that, man. Have a fantastic day yourself, sir. But some traders are. Yeah, you said it, dude. Today's a good example. Pre-market, I got good confirmations, but low vol, and the market was already hitting its current high. So I cut half of the contracts early, and I set break even on the other two. See, there you go. There's an example of some discretionary trade management right there. Admit it to yourself, like on AA meeting, I messed up with a 30K loss and don't repeat. Yeah, but it's subjective too. You have to know, what fueled you to do that, to have the 30K loss, What how did you lose the 30K? Did you just fucking YOLO it on calls? Did you just cuz man, this is like a deep thing you're getting into, man. That's why I'm here to tell you guys, there's so much misinformation in the world today that I understand why so many traders are gravely misinformed about a lot of things, and they take trades sometimes not understanding how a market actually operates. You know, you have all of these factors in your favor. The company is good because of this, because of this, because of that, because of that, because of that. You start creating a story for yourself, and then you get into the trade, and then all it does is go against you, and you keep averaging in because you thought that, because you have your factors are there, and then pretty soon, you know, you lost all your money on the trade and you don't know why, and then you just stop because whatever. I don't know. I'm just giving you a scenario, but like there's a lot of kind of misinformation that can lead traders into making decisions that, you know, maybe they weren't ready for maybe they had false expectations. That's what I'm trying to get across. What's this guy saying? I've had an funny story on dedication. I found your channel and started trading in March of 2020. After 2 months or so, I got busy with uni. I handed over my IB account to my mom and taught her basic ins and out of finance and trading. That's cool, dude. On the other end, after market open ran up, I said break even after I was up 20 points. Okay, I'm just reading through these last comments, and I'm going to be out of here, guys. She has been dedicated in trading every day until today and now has a solid year of trading experience, while I, a finance student, got barely 2 months in. Yeah, there you go. So I would let the market open, trade, run its course, because the volume could make anything happen. Okay. Well, yeah. Usually feeling like you're working and going more and more into deep hole, but market makes you bleed out faster as you add to the loser. Most common psychology, having a bias, that's downfall. You got you, dude. You know it, dude. You know it. Hey, what's going on, Dave? What's going on, JK? Hope you guys are well today. I am about to head off, I'll be honest with you. But it's been a great stream. I guess we could just, you know, give a last quote of the market here before we head off here. You know, Tesla, a bit of consolidation here today. The rest of the tech stocks here pretty flat, pretty up flat, and closing flat on the Qs. We're 4:40 p.m. here. The quote board says we're flat, but I know that we're up today. But it's actually, no, it's flat based on Globex. That's what it is. Because if we go ahead and look at Globex, you can see that, well, wait a second here. I don't know. How about that? We're just up. Okay, the market's close to all-time highs. Where's that other quote board? Let me find it. Again, looking at these two-year yield, just a little bit of a tiny rally into the close here. And yeah, again, that 2-year product moving a lot there. Small exchange, 2-year SME, guys. Don't forget about that. And again, last few quotes here. There we go. Okay, triple Qs. There we go. That's the quote. Up 4/10 in the session. I gotta get my quote boards in order. That's what I gotta do. All right, guys. Well, I'm out of here for today. I'm gonna go hit some weights in the gym. Watch out for tomorrow. You know, keep your risk managed. Cheers. Thanks, JK. And the mobile app. I'm gonna do a video on the mobile app pretty soon, I believe. So that's a good idea. Thanks. Appreciate all the kind words, guys. Some content. Yeah, man. All right, you guys. Take care. Have a good evening. See you some other day. See you later in the week. All right. Cheers.